What's going on YouTube? Today is day number 21 of the $1,000 account challenge, and we are down today $97.71 or 4.93% of the total portfolio balance. If you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options using my system only to see how far we can grow this account. And man, what a tough day it was. A couple of mistakes that were made and things that really could have been avoided had I just stayed a little bit more patient. We're going to talk about it. Today we live traded straight off the day trade watch list. We had Tesla as a short idea below $229. So Tesla was a gap down stock from a couple of days ago. We were looking at consolidation, gap down this morning. I was looking for the continuation drop, which we did get. But the time that I took my entry, like I said, I just wasn't staying patient enough. First 5-minute candle closed below, second 5-minute candle gets bought back up, right? And if you're looking at this on the 5-minute time frame, you're like, Gates, why would you even take this short entry? It barely even dipped below 229 right here. If you just waited till you get the break of 229 over here, now all of a sudden, you know, you've got your short entry or the perfect rally retest for the short entry. Yes, I know. I gave too much focus here. This was my mistake. I gave too much focus to the 1-minute time frame. What I saw on Tesla was a drop and then consolidation. And then I saw another drop down, and I was thinking on this drop, we're going to get the rally up retest, rejection of 229, and then the move lower, right? And we did not get that at all. The stock rallies up. I take my short entry there, and it continues up. And I made the decision to close the trade out as it broke back above this consolidation right here. So as the stock printed these candles up above that consolidation, I was like, you know what? It's not making lower highs here. It's making higher highs. I need to get out. So I closed Tesla out for like a 30% loss here, just to watch it stay below that price point. I mean, I literally closed it at the top just to watch it stay below that price point and continue down and give me confirmation later on. So had I held here, I would have been green. Had I just stayed patient and waited for the breakdown over here, I would have been green. Had I just taken the entry short over here, I would have been green. But you know, shoulda, coulda, woulda. So my mistake here was giving too much focus to the 1-minute time frame. There's just as much to be learned about these losing trades as there is the winning trades, and that's what caused me to take the loss on Tesla today and be a little bit impatient. Straight off the day trade watch list, we had Google as a long idea above 143, but we adjusted this long trigger to 143.5 given that it was already opening up above 143. Now we get the $2 run right after the open, $2 run up to highs of 145. You know me, I'm not chasing the move, right? I'm waiting for the pullback. So we do get the pullback pretty close to 143.5. I'm thinking that this is going to put in a higher low. I see the candle start to get bought up, and I go long on the position on Google here, looking for the rally up towards the high of day. So my risk off amount down to the trigger level looked like that versus my reward looking like that, right? Lots of potential reward here, fair amount of risk. Now, I did not do what I should have done in this trade, which was just close the position out the moment that it broke the trigger level on that candle. Instead, what did I do? I added to the position and gave it more room to work against me. So I moved my stop loss down to the low of day here. I added to the position there to try to manage this trade. I was looking for a little bit of a relief rally, of some sort of a bounce, and we just didn't get it. The stock continued down, dropped below, made a new low of day here, and I closed it out. This for me was about a 50% loss. 50% loss on Google. My mistake here being that I don't think the initial entry was bad at all. My mistake, though, was that I added to the position as it broke below the trigger rather than closing it out the moment that it broke below the trigger. So first mistake on Tesla being just not patient enough. Second mistake on Google, not closing the position early enough, leading to a larger loss than really what I needed to take here. But we recouped a lot of those losses with a trade on SPY, and this was beautiful. So we had a SPY long idea above 478. It rejects that level and comes down. It does open well above the previous day's closing price. So SPY today was a gap up day, right? Opens above the PDC, fails to hold the PDC as support. This is a strategy known as a green to red move. This is something that day traders look for, and it all revolves around the previous day's closing price, where the stock opens above the PDC, fails to hold it as support, and falls below. So we get a bear flag formation shaping up underneath the previous day's closing price, the start of this bear flag breaking down, and I take the entry short on SPY right here. Beautiful entry, beautiful trade. The contracts ran over 100% here, and I wound up taking my profits at 20%. Maybe another mistake. So I would say even mistake number 3, because I knew that this had momentum today, right? I knew that it had the power to drop pretty heavily, and I knew it had room down to 475. But I closed it out at a 20% gain instead of letting it go to 30, 40, 50%, because I was already red on the day and I just wanted to recoup some of the losses. I wasn't looking to make all of them back. I just wanted to recoup some of them. So I did take the 20% gain on SPY when it was offered just to get a green trade in the books and negate some of those losses. But man, had I just held here, this one single trade would have put me green on the day. So it's super unfortunate that, I didn't let this run a bit further or even try to scale out of this. I just closed it all at a 20% gain. So 3 mistakes here today, and a lot to be learned on this red day. Number 1, I've got to stay more patient. I can't give too much focus to that 1 minute time frame, because that's how mistakes happen. That's how I get faked out. That's exactly what happened on Tesla. Number 2, I need to start trading my plan more. Giving Google today that extra room to work against me was unnecessary. I should have cut the position the moment that it did not hold the trigger level and continued to dip lower, as opposed to adding into the trade. Number 3, SPY, let those winners run, right? I should have just scaled out of this position rather than taking all the profits at 20%. I might have even been able to manage a break-even day if I had just considered scaling out of this rather than closing everything all in one lump sum at the 20% profit mark. So all of those mistakes lead us to, I think, now our 3rd or 4th red day in the challenge account. We're down $97. Not a big red day, but percentage-wise kind of big, almost 5% here. We will rebuild. We will make it back. That is why we build up this profit margin in the account, because we're not dipping into our initial investment on these red days. So hopefully, we'll be able to make this money back within 1 or 2 trading days and be right back on track to making this account grow. Thank you all so much for your time. If you've watched this far, press that like button for me. If you haven't done so already, subscribe to the YouTube channel as well. It's the best way to support this type of work that I do. I appreciate you and your support. Thank you so much. Cheers, take care, and enjoy the rest of your day.